What's up? Welcome to Blockchain Tech and Finance News with me, your host, KinToshi. If you're on the YouTube side, please do subscribe, turn on the bell notifications. Again, right here to Blockchain Tech and Finance News. This is every... I don't want to end the stream. This is every day. Was at 7:30 a.m. Kind of exploring the best time for this. So, assuming that yes, an adjusted schedule. This was going between like 7 a.m. and 7:30 a.m. The best time, seemingly moving forward, is 8 a.m. EDT time. So a little ahead of schedule, and it gives room for basically all the research I'm doing, basically everything I do to get the stream going. And then Saturday, 12 p.m. EDT time. On the weekends, if you're on the chat side, you can go ahead and leave your comments and chats in there. I'll show it up on the Jumbotron. And also, finally, if you are interested in NFT artwork, you can follow me on OpenSea Foundation on my KinsArt. You can follow on TikTok KinToshi GG, follow on Instagram KinToshi GG, and Twitch KinToshi GG for gaming content and extra social content right there. Without any other further ado, waste of time, anything like that, let's go right on into the market news. So let's start out with the markets. We got let's go over to the US. We have the Dow down 0.32%, S&P 500 down 0.75%, NASDAQ down 1.04%, the global down 0.49%, and gold up 0.01%, and crude oil down 0.22%. In the Europe markets, with the FTSE 100 down 0.94%, the DAX down 0.81%, the CAC 40 down 0.48%, the FTSE MIB down 1.34%, the IBEX 35 down 0.67%, the Stock 600 down 0.72%. In the Asia markets, the Asia down 2.18%, the Nikkei down 2.64%, the Hang Seng down 2.23%, Shanghai up 0.19%, and Sensex down 1.46%, and Singapore down 0.08% on the FX markets. We have the Euro 0.22% up, Yen is down 0.10%, the Pound is up 0.24%, the Australia dollar is down 0.11%, the DXY index is down 0.24%, and the WSJ IDX is down 0.12%. In the rates market, we have the US 10-year up 0.034, up 0.036, the Germany 10-year up 0.021, Italy 10-year up 0.119, Spain 10-year up down 0.008, the UK 10-year down 0.040, and the Japan 10-year up 0.0014. In the futures market, we have the DJIF down 0.35%, S&P F down 0.48%, NASDAQ F down 0.53%, gold up 0.07%, silver down 1.17%, and crude oil down 2.27%. In the crypto markets, we have the Bitcoin in USD valued $19,080, down 0.85%, Ethereum USD $1,282.01 per ETH, down 0.194%, XRP USD down 0.76% at 48 cents per XRP, Bitcoin Cash $111.37 per BTC. I don't even know what the ticker is for that anymore. 1.99%. Litecoin USD LTC is down 2.48%, and Monero USD is down 1.75%. Let's go into the first piece of news we have for the day. This is from Cointelegraph. We're going to start in the blockchain news, then go on some cryptocurrency news, a piece of NFT news, then we're going to go into technology news, finance news, and a piece of global news, and we'll close out the stream for the day. So from Crypto Briefing, we have Bitcoin, Ethereum will go much higher post-recession, so says Paul Tudor Jones. Legendary investor Paul Tudor Jones has reaffirmed his belief in crypto, saying that scarce digital assets will have value in the future. The key takeaways on this is Paul Tudor Jones has said that Bitcoin and Ethereum could benefit from rising inflation and weak macroeconomic conditions due to their scarcity. He argues window pop popped up there. He argued that the U.S. economy is either in or heading for a recession. That makes that markets could rally if the Federal Reserve stops hiking interest rates to combat inflation. Stanley Druckenmiller shared similar views to Jones last month, pointing out that economic turmoil could highlight crypto's value. Paul Tudor Jones said he believes the U.S. economy is either in or on the cusp of a recession. Jones thinks recession is looming. A lot of people think that, and that's basically being seen. Despite a months-long bear market that has dragged Bitcoin and Ethereum 70% down from the highs, Paul Tudor Jones has made it clear that he thinks the top two crypto assets could soar in a post-recession world. The billionaire hedge fund manager discussed crypto's place in the current macroeconomic landscape in a Monday interview with CNBC's Squawk Box. Said he thought the nascent asset class could see significant growth in the future. John shared his thoughts on the current state of the global economy, noting that he believed the U.S. was headed for a recession if it wasn't already in one. I would think we're probably getting ready to go through the recession playbook, he said, predicting that the 2020s could be defined by a focus on debt dynamics, fiscal deficits, and policy that gives people confidence in the long-run value of a currency. Jones said that he thought central banks had engaged in a massive experimentation in the years since the global financial crisis, arguing that suppressed yields and pandemic relief packages were products of monetary and fiscal experimentation. Reflecting on the digital asset space, Jones pointed to high inflation rates as a potential catalyst for a crypto surge. In a time when there's too much money, which was why we have inflation and too much fiscal spending, something like crypto, specifically Bitcoin and Ethereum, where there's a finite amount of that, will have a value at some point, he said. When CNBC's Andrew Ross Sorkin asked whether crypto would have a much higher value than today, Jones said, "I think so, yeah," but admitted that he doesn't know when the prices would rise. Jones also commented on the Federal Reserve's economic tightening policy, which has seen the U.S. central bank hike interest rates by 75 basis points on 3 occasions this year. The Fed has forecast a peak funds rate of 4.6% in 2023, raising the economist's expectations of further hikes before the end of the year. The current funds rate is 3% to 3.25%. As others have predicted, Jones said that a pivot in the Fed's hawkish stance could lead to a surge across global markets. When a pivot happens, you'll probably have a massive rally in a variety of beat-down inflation trades, including crypto, he said. Jones also revealed that he holds an allocation in Bitcoin, having repeatedly endorsed the asset since touting it in the beginning of inflation as a bet against inflation in 2020. Macro legends expect crypto rise. Jones is not the first macro legend to suggest that crypto could eventually post a recovery despite the gloomy macroeconomic backdrop. Last month, Stanley Druckenmiller shared similar thoughts to Jones, hinting that a possible crypto renaissance is if the public starts to lose trust in central banks. He also called for a hard landing and recession for the economy in 2023. It's up to the National Bureau of Economic Research to declare whether the U.S. economy is in a recession or not. And while no such declaration has been yet made, Jones and Druckenmiller's viewpoint is that the current tightening environment makes the recession inevitable in the next few months. Jones pointed out that in the interview that unemployment rates are currently at a relatively low 3.6% in the U.S. For the Fed to pivot, he argued unemployment numbers would have to be higher. If he is right, that suggests that crypto could benefit from rising unemployment since the market has been dependent on the Fed's moves throughout this year. Jones and Druckenmiller's bullish crypto thesis effectively stems from the idea that Bitcoin can act as a hedge against inflation. Jones specifically name-dropped Bitcoin and Ethereum as potential benefactors of fiat currency erosion, pointing to their scarce properties. Bitcoin's fixed supply of 21 million is treated with almost religious ardor by certain corners of the crypto community, while Ethereum has occasionally gone deflationary since it's completed the merge of proof of stake. While the Fed's aggressive approach to combating inflation has battered markets this year, things could change if the central bank changes its tune. According to Jones, crypto will be poised to take the spotlight when the tide turns, but there's a looming recession to get through first. All right. That's an interesting article there about how Bitcoin and Ethereum will go much higher post-recession. So says Paul Tudor Jones. In this next piece of news, we have from Cointelegraph. Formula One files F1. Files trademarks covering crypto, NFTs, and the metaverse. The Formula One files the F1 trademarks. The racing competition has plans to set up an online marketplace for cryptocurrency, meta tokens, digital collectibles, crypto collectibles, and NFTs. This is from writer Judith for Cointelegraph. Formula One is looking to establish itself within the Web3 ecosystem with 8 recently filed trademarks for its globally recognized F1 abbreviation. According to according to according to licensed trademark attorney Mike Con- Condutis, Doubt I don't know. The Race Car League filed 8 trademark applications on October 5th covering cryptocurrency, non-fungible tokens, NFTs, crypto marketplaces, retail stores for virtual goods, cryptocurrency trading and mining, and blockchain financial transactions. Formula One has filed 8 trademarks for F1 covering cryptocurrency, NFTs, plus crypto marketplaces, retail stores for virtual goods, blockchain financial transactions, cryptocurrency mining, and trading and mining, and more. So basically, the file trademark suggests that F1 has plans to play an active role in the emerging Web3 ecosystem with its trademark covering software for the use of cryptocurrency, meta tokens, digital collectibles, and NFTs, as well as software for digital currency payments and exchange transactions. Beyond software, Formula One also has plans to offer retail store services and virtual goods, as well as provide an online marketplace for buyers and sellers of cryptocurrencies and NFTs. According to the trademark file, F1 will also dabble in financial transactions via blockchain technology by providing a digital currency or digital token. The scope of the trademark also extends to entertainment services using virtual goods, namely downloadable artwork, cryptocurrency, digital collectibles, crypto collectibles, and NFTs for use in online virtual augmented or mixed reality environments as well. In August, Cointelegraph reported that F1's trademarks department registered 2 new trademark filings with the United States Patent and Trademark Office for the Las Vegas Strip Circuit. The company's brand and logo were going to be listed on a wide range of goods and services during the next year's race. F1 is among several major brands to seek exposure to the Web3 economy, which is still in its nascent stages. Asset managers also recognize the potential with exchange-traded fund ETF issuer Bitwise recently launching a Web3 ETF for institutional and retail investors there. So this is another central entity for Formula One, F1, filing trademarks for the F1 trademarks covering crypto, NFTs, and the metaverse. That's what I like to cover here is more key players, central entities, larger entities, corporate and world who's dabbling in blockchain technology, NFTs, crypto, like that. So this next article is from Arjit Sakar, writer for Cointelegraph. It's Polygon's ZK EVM public testnet to enable smoother Ethereum migration. DeFi protocols, AAV, and Uniswap, along with other projects, will be among the first projects to deploy on the ZK EVM testnet. Decentralized Ethereum scaling platform Polygon, with the Matic token, is 80 cents a time of writing, announced the launch of Polygon ZK EVM public testnet in Ethereum. So EVM is an Ethereum virtual machine, and let's see what the ZK is. Something ZK Starks. Ethereum equivalent ecosystem with cross-compatibility to existing smart contracts, developer tools, and wallets built on Ethereum and Polygon proof of stake. Zero-knowledge Ethereum virtual machine ZK EVM is a layer 2 construction on top of Ethereum that aims to improve scalability through mass transfer processing rolled into a single transaction. The testnet launched under Polygon's zero-knowledge R&D team is a full-featured open-source implementation of ZK EVM. Decentralized finance DeFi protocols AAV and Uniswap along the Web3 social platform Lens and gaming studio Midnight Society will be among the first projects to deploy on the ZK EVM testnet. Polygon encourages Web3 developers to collaborate by deploying contracts and identifying bugs as the platform spearheads the adoption of ZK technology. The words of Polygon co-founder Mihailo Bjelek. We invite the whole community to try out the testnet, help us test its limits, break things, and identify bugs so we can all together deliver the first ZK EVM to the world. So that's really cool. Yeah, obviously we want to work in testnets, break things, see what's not working, what is working, how to improve the things that aren't working and correct them so that everything is 110% working before rolling into a mainnet stance. Most definitely. So cool to hear. Full equivalency rather than hearing like things like Solana, which probably also did testnet stuff, but maybe not enough testing because it roll it out into main chain, things break and chain stops, from what I noticed. The full equivalency of the full equivalency with the EVM allows developers to migrate to ZK EVM without the need for new programming languages and tools or translation of existing code, which also includes a completely open source ZK prover mechanism. The announcement highlights that Polygon ZK EVM offers greater capital efficiency while enabling businesses to move fast, low-fee, decentralized applications on Ethereum. Last month, on September 27th, Space and Time raised $20 million in strategic funding from investors like Microsoft, M12 Fund, and venture capitalists on Microsoft Avalanche and Polygon. $20 million funding round saw participation from several other investors, including CoinDCX and Hashkey. Michael Gonzalez, an executive at M12, expressed that Microsoft's VC firm is looking forward to see how centralized systems can be automated and connect to smart contracts. Nice. Awesome. That's good to hear right there. So this is from Polygon's ZK EVM public testnet to enable smoother Ethereum migration. I'm actually pretty bullish on that. That's pretty cool, right? We can talk about Polygon more as the layer 2 scaling of Ethereum. That's like a sidechain, basically. So this is from Cointelegraph in the business sector of NFTs from writer Will Canny, again from Cointelegraph. Brokers firm Bernstein says NFTs are not dead. These tokens are redefining the crypto consumer stack, the reporters said. So the business of non-fungible NFTs is getting serious. While they may have started out looking like speculative JPEG images, they are now redefining the crypto consumer stack in terms of games, social content, and commerce. Brokerage and research firm Bernstein said in a research report Monday. The early success and subsequent decline of NFT activity has multiple lessons, but the sector is still in the early stages of adoption. NFTs are how crypto could go mainstream and onboard users, the report said. NFTs are digital assets on a blockchain that represent ownership of virtual or physical items and can be sold or traded. NFTs are not dead. Analysts Gautam Chugani and Manas Agrawal wrote, noting that well-known collections such as the Bored Ape are still holding a floor price of 100,000. The number of active monthly users on OpenSea is stable at about 360,000, down about 35% from a high around 550,000 users per day. The real part of the NFT revolution is using these tokens as Lego blocks to build a fun game, the note said, adding that crypto games are no competition to the mainstream gaming studio, but it is possible to build a new genre of NFT-powered games in which players can earn and own in-game assets as NFTs. Brands leverage NFTs to sell digital goods for real-life experiences, Bernstein said, and as the crypto consumer base expands, every brand will need to build an NFT market strategy, noting that Nike and KE has already about $100 million revenue through NFTs. The success of NFTs will now depend on their ability to deliver a real product, such as gaming worlds, content, and merchandise, the note said, adding that blockchain games should not try to compete with the large gaming studios, but innovate on gameplay that is unique to crypto. The NFT infrastructure stack will continue to see significant private investment, the note added. Yeah, most definitely there's a lot of money pouring into NFTs and blockchain and art, still NFT art. This article there, short little article there from CoinDesk. The next article is in the Fortune part, and we're going to shift over to, we're going to do one more piece of news and NFT, and I think we're going to shift over to technology and then finance. This is from CNN, tech part of CNN through Fortune. Different writer Alice Hearing. CNN suddenly, this is about CNN, sorry. CNN suddenly shutters its NFT marketplace, and collectors are calling it a rug pull. CNN has been accused of a rug pull after it suddenly shut down its Web3 project Vault by CNN, leaving collectors blindsided. The news network has sparked outrage among collectors who paid thousands for non-fungible tokens sold by Vault, CNN's own NFT marketplace, which was set up in 2021 to offer collectors the opportunity to own a piece of history. Investors could pay for digital ownership of CNN news reports or artistic interpretations. In a message on Monday, members were told that the company had decided to end what it was originally a 6-week experiment, and that they would be compensated pro rata based on the total purchase price of each wallet's NFT, according to a snapshot taken on October 6, 2022. A separate message from CNN staffer Jason confirmed that that this would amount to roughly 20% of the original mint price for each Vault NFT owned. Developers also added that NFTs would remain under the ownership of those who bought them, and the website would remain open to be used as a marketplace so that collections could still be viewed. Additionally, unsold NFTs are to be burned, making the remainder rarer. The rug pull. Despite reassurances, collectors in their Discord server expressed disappointment. Many worried that they wouldn't get their money back and accused CNN of a rug pull. The term described as a situation where investors or collectors are blindsided by a project suddenly being abandoned by developers, leaving them with nothing. As an, is an announcement of rugs supposed to be consoling to a community who waited patiently for slow but promised utility? Asked one user in the Discord, referring to the collector benefits listed on the website as coming soon. Another user described the decision as one taken with little care, concern for collectors and plans to the cutthroat company way. That I kind of agree with, to be honest. Poor choice for a company this size. No one will welcome CNN entering Web3 if NFTs are board again, wrote another user. Yeah, I definitely 100% agree with these two parts of the statement right here. It was definitely a poor choice for their company size to shut down something that's like just needing to be building in a bear market. And they obviously don't believe in what they're thinking they want to do with NFTs, and they probably should have done it from the start, if you ask me. Several, just to be blunt about it, to be honest, several also expressed confusion around the company's use of the phrase 6-week experiment, since it was never advertised as such, and there appears to be no evidence of CNN using this description earlier. CNN representatives not immediately respond for request of comment. I mean, yeah, when you don't ever disclose to the 6-week experiment with people and they put in thousands of dollars, and then you say that afterwards, that's not really correct or competency for a large company, especially a news network like CNN, to do. Really, that's my take on it. Being involved in NFT projects, and starting things like an NFT project with a comic book that is saying, we're adjusting one part of the story to release this part of the story first, and it has an NFT drop within it. That is like a communicational effort within community that might be a sudden shift, but otherwise, like saying like we're just ending this, or this was a 6-week experiment. Pop-up words is not going to fly with people in the community and Discord. As far as NFT collectors, the announcement came with little explanation, and several signs indicate that CNN was planning to continue its NFT project. Documentation on the marketplace website features a 2022 roadmap that details upcoming benefits for members, including a virtual gallery experience, exclusive events for collectors, and even the opportunity for collectors to mint their own CNN article NFTs. I mean, why stop it? Why not just do it? However, CNN did reportedly earn over $300,000 from sales. The value of NFTs have declined, and investing in them is not as popular as it once was. Bloomberg cited data from Dune Analytics recently reported that non-fungible token trading in September has returned to pre-bubble levels, with monthly volumes falling 97% from a January peak. All right, so that's that there. Probably they should either turn it around, keep running it, and just keep building upon it, or just completely 100% return everybody's what they put into it at this point. Actually, after like pop-up words, it's 6-week experiments stuff. Seems. Anyways, let's go through it. Shift over into technology news and some finance news, using global news, and we're close up the stream for the day. So this is from UK spy chief. This is from NBC News. From UK spy chief warns China's use of technology threatens global security. So we'll see what the take on this is, right? Again, do your own due diligence research, right? The head of GCHQ, Britain's electronic spy agency, also says Russia's forces are exhausted and facing a desperate situation. What's this? From satellite images to digital currency, China is seeking to use new technologies to repress dissent at home and dominate its adversaries abroad, according to a UK intelligence chief. Unlike Britain or its democratic allies, China views technological advancements as a tool to gain advantage through control of their markets and of those in their sphere of influence and of their own citizens, according to excerpts of a scheduled speech by Jeremy Fleming, head of government communications headquarters, UK's electronic spy agency. Fleming is due to deliver a warning on Tuesday in London at the Royal United Services Institute, a defense and security think tank. His office released excerpts of his speech to reporters in advance. The intelligence chief will say that Beijing's great strength combined with fear is driving China into actions that could represent a huge threat to us all. Citing China's focus on strategically vital technologies, Fleming will say that how governments respond to China will define our future, and the scientific and technological community and the democratic countries will need to rise to the challenge. According to excerpts from his speech, Fleming will cite several examples of how China seeks leverage from key technologies or tries to rewrite international standards. China is pursuing a centralized digital currency that could enable China to partially evade the sort of international sanctions currently being applied to Vladimir Putin's regime of Russia, Fleming said, according to the prepared remarks. Beijing is building up its Beidou satellite system, which could be used to block adversaries' access to space or to bolster the surveillance of its citizens, according to Fleming. Many believe that China is building a powerful anti-satellite capability with a doctrine of denying all other nations access to space in the event of a conflict, and there are fears that technology could be used to track individuals, Fleming will say. China also has proposed new international rules for the internet that could threaten digital freedom and enhance state control, threatening human rights by the introduction of new tracking methods, the speech excerpts say. According to Fleming, China's report of technology is part of an effort to create client economies and governments in countries that risk mortgaging the future by buying Chinese tech that contains hidden costs. Fleming's planned speeches come after the head of the FBI, British counterpart, delivered a stark warning in July about the security threat posed by China, underlying China's belief in one-party rule and tight state control is a sense of fear, Fleming said, a fear of its own citizens, of freedom of speech, free trade, free technological standards and alliances, the whole open democratic order, international rule-based system. China has accused the U.S., Britain, and their allies of trying to block China's rise as a world power, has denied allegations of human rights abuses, or that it seeks to coerce other governments. Fleming also planned to address Russia's recent setbacks in its war in Ukraine, saying Moscow's forces are in a desperate situation, according to experts from his speech. Far from the inevitable Russian military victory that the propaganda machine spouted, it's clear that Ukraine's courageous action on the battlefield and in cyberspace is turning the tide, experts said. The cost to Russia in people and equipment are staggering. We know in Russia, Russian commanders on the ground know that their supplies and munitions are running out, he will say. Russia's forces are exhausted. The use of prisoners to reinforce, and now the mobilization of tens of thousands of inexperienced conscripts speaks to a desperate situation. It's an interesting take on that. So, UK spies chief warns China's use of technology threatens global security and interconnected with the whole Russia-Ukraine conflict in the Russia war right now. This article is from CNBC in the finance market. So the Bank of England intervenes in bond markets again, warns of material risk to UK financial stability. This is from writer Elliot Smith for CNBC. The key points here is its function in this market and the prospect of self-reinforcing fire sale dynamics pose a material risk to UK financial stability, the Bank of England warned. The move marks the second expansion of the central bank's extraordinary rescue package in as many days after it increased the limit for its daily gilt purchases on Monday ahead of the planned end of the purchase scheme. In London, the Bank of England on Tuesday announced an expansion of its emergency bond buying operation as it looks to restore order to the country's chaotic bond market. The central bank said it will widen its purchases of UK government bonds, known as gilts, to include index-linked gilts from October 11th until October 14th. Index-linked gilts are bonds where payouts to bondholders are benchmarked in line with the UK price index. The move marks the second expansion of the bank's extraordinary rescue package in as many days after it increased the limit for its daily gilt purchases on Monday ahead of the planned end of the purchase scheme on Friday. So the yield on UK 30-year, 10-year, and 2-year gilts right here. Chart lines. Take a look at those. Again, I have all these news articles and the recap on the YouTube side, and you can research and read more at your own due diligence. The bank launched its emergency intervention on September 28th after an unprecedented sell-off in a long outdated UK government bonds threatened to collapse multiple liability-driven investment (LDI) funds widely held by the UK pension schemes. The beginning of this week has seen a further significant repricing of UK government debt, particularly index-linked gilts. Dysfunction in this market and the prospect of self-reinforcing fire sale dynamics pose a material risk to UK financial stability, the bank said in a statement Tuesday. UK 10-year index-linked gilt Yields rose by 64 basis points on Monday, representing a massive 5.5% fall in price. Meanwhile, 30-year index-linked gilt prices were down 60% on the day, and yields now at 1.5%, having been in 1.5% just 6 months ago. Yields move inversely to prices. Moves of this magnitude are highly unusual in developed world sovereign bond markets. These additional operations will act as a further backstop to restore orderly market conditions by temporarily absorbing selling off index-linked gilts in excess of market intermediation capacity, the bank said Thursday. As with the conventional gilt purchase operations, these additional index-linked gilt purchases will be time-limited and fully indemnified by HM Treasury. On Monday, the Bank of England set the upper limit of its daily gilt purchases at $11 billion, up of which €5 billion will be allocated to conventional gilts, and that's pound, not euro, and $5 billion to index-linked gilts. The size of auctions will remain under review, and banks said, and all purchases will be unwound in a smooth and orderly fashion once risks to market functioning are judged to have subsided. So, the reaction in UK markets was muted following the announcement. The 10-year gilt yield slipped to 4.426%, while the 30-year yield was roughly flat at 4.713%. So the government must establish credibility. DeLawrence, senior investment strategist at State Street Global Advisors, told CNBC on Tuesday that the Bank of England's ability to stabilize the market single-handedly is limited. The wild moves in bond markets were triggered by Finance Minister Kwasi Kwarteng's controversial fiscal policy announcement on September 23rd, which contained large swathes of debt-funded tax cuts as part of the new government's aim to drive economic growth to 2.5%. The UK's government is in a good position with regards to its net debt to GDP is around 80%. That's a pretty decent position. And what they need to do is explain to investors the credibility behind their economic projections, and to be fair, that's something well outside the remit of the BOE, Lawrence said, along with concerns over fiscal credibility, which led Moody's and other credit ratings agencies to revise down their outlook for UK sovereign debt. Lawrence suggested that the correlation between US long-dated Treasury yields and UK gilts also limit the Bank of England's reach. Kwarteng announced Monday that his detailed expansion on the policy statement that spooked markets will now take place on October 31st. 3 weeks before originally scheduled, the government has already been forced to U-turn on some components of its strategy. On October 31st, the Bank of England plans to begin its delayed sales of gilts as part of a wider quantitative tightening effort and unwinding of pandemic-era monetary stimulus. The Monetary Policy Committee will not meet again until November 3rd after its scheduled recommencement of gilt sales, after several strategists have attributed to lingering skittishness in bond markets despite the bank's efforts to the limited timescale of its intervention and the prospect of gilt sales beginning again. Taking off the emergency QE band-aid and replacing it with indirect liquidity support opens the door to renewed repricing of UK assets while hopefully preserving the BOE credibility and preventing a return of disorderly conditions. Krishna Guha, vice chairman of Evercore ISI, said in a research note Monday night, "We will continue to think that the BOE likely will have to reschedule or pre-profile the QT program it has promised to resume." Guha said a key risk now is that Kwarteng's expansion budget statement falls short and kicks off a fresh wave of selling pressure in UK bonds. Whether the government succeeds or fails in shoring up fiscal credibility will define the trade-off facing the bank, he said. If it fails, the market rate will move up further, and the bank will face a near impossible trade-off between validating these expectations and crushing the economy and housing market, or trying to deliver less than the market expects and crashing sterling and risk inflation expectations. So that's here a continuation on bonds buying. The Bank of England intervenes in the bond markets again, warns of material risk of UK financial stability. All right, so we have two more articles here, one in finance and finally in global news. I'm going to close out this stream for the day. This one's from Yahoo Finance. This from writer Brian Sozzi, anchor editor at large in Yahoo Finance. Netflix may haul in billions of dollars by selling ads, predicts JP Morgan. So Netflix stands to haul in big bucks over the next few years from the launch of its first ad-supported tier, estimates J.P. Morgan. Analyst Doug Anmuth estimated in a new note on Monday, Netflix could drive 7.5 million subscribers to its ad-supported tier in the US/Canada segment in 2023. That alone will help drive $600 million in advertising sales in 2023 for the segment. Anmuth expects those numbers to swell by 2026 as Netflix execution on selling ads improves. By 2026, Anmuth thinks Netflix's US-Canada segment will boast 22 million subscribers and drive $2.65 billion in advertising sales. Optimism on Wall Street regarding the financial impact of Netflix's looming ad tier has greatly supported the stock in recent months. Shares of its streaming giant are up 19% in the past 3 months, outperforming S&P 500's 4% drop. Given Netflix's recent muted sub growth, advertising is critical to re-accelerating revenue, expanding Netflix SAM subscription address market, and driving greater profitability. Explaining Anmuth, the Netflix narrative has shifted from slow/no sub growth on the current business to advertising and paid sharing coming in 2023. In Anmuth's point, the first half of 2022 has been on Netflix-like factors that have led to the stock plunging 63% year to date. The company shed more than 1 million paid subscribers in the first 2 quarters of the year as the economy slowed and consumers cut back. Becoming more mobile post-COVID-19 pandemic and also weighed on subscriber trends for Netflix has been the rising of competing streaming platforms from Disney and Paramount. Obviously, there's Hulu too that's doing ads. But there's a real chance for Netflix to make a meaningful business by offering an ad-supported pricing tier for consumers. Cohen announced. So Hulu's already doing this, right? Hulu has ads, and it's like it's just a cheaper monthly cost for Hulu with ads rather than Hulu without ads, basically. That's what I suspect is going on here. We'll see. Cohen analyst John Blackledge says, hence Netflix's shares have come back alive. I think it's a bet. I think it will be a net incremental positive. Blackledge said on Yahoo Finance Live, it's a positive multi-year revenue opportunity for the company. So yeah, most definitely. You can see an upturn there, and you also see ads playing in your Netflix between your shows that you don't want to see, so you got to pay the premium so you get those ads off of there. That's how they're going to make their money. We'll do it either way, so it doesn't matter. All right. Closing out the news for the day, we're going to be doing this global piece of news. It's from Global News on the Russia-Ukraine war. Worried UN meets to discuss Ukraine war hours after deadly Russia attacks, from Jennifer Peck and Associated Press with the Global News. The UN General Assembly Monday whether that Russia reversed course on annexing 4 regions of Ukraine, and that came as Moscow's most extensive missile strikes in months alarmed much of the international community. The Assembly's special session was planned before Monday's, but yesterday the country spoke out on a widespread Monday morning rush hour attacks that killed at least 14 people in stores. Ukrainian Ambassador Sergei said some of his own close relatives were imperiled as a residential building unable to take cover in a bomb shelter. By launching missile attacks on civilians sleeping in their homes or rushing toward children going to schools, Russia has proven once again that it is a terrorist state that must be deterred in possible ways, he said. Russia said it targeted military and emergency facilities, but some of the missiles smashed civilian areas, parks, and commuter minibus, and more. Russia has said it was retailing for what it called Ukrainian terrorist attack on Saturday on an important bridge. The ambassador Vasily Nebenzia told the assembly that Moscow had warned that there wouldn't be impunity for such an act. The bridge was civilian infrastructure, critical infrastructure, he told reporters outside the chambers. Ukrainian officials haven't confirmed that Kyiv was behind the bridge attack or other instances of apparent sabotage that have said they welcome setbacks for Russia in all territory that it has claimed to annex. UN Secretary General Antonio Guterres was deeply shocked by the Russian attacks and spoke Monday with Ukrainian President Volodymyr Zelensky, said UN spokesperson Stefan uh, Dujarric. Various nations also deplored the bombardment. Turkish UN ambassador, whose country helped the UN broker a July deal to get Ukrainian Russian grain exports flowing, called Monday's attacks deeply worrying and unacceptable. Costa Rican ambassador Maritza Chan Valverde said the strikes showed continued and complete disdain for human rights, humanitarian law, and international norms. Hours after the missiles flew, the UN Assembly gathered to consider responding to Russia's reported absorption last month on Ukraine's Donetsk, Luhansk, Kherson, and Zaporizhzhia regions. The move followed Kremlin-orchestrated referendums that the Ukrainian government and the West have dismissed as sham votes conducted on occupied land amid warfare and displacement. A proposed assembly resolution would demand that Moscow immediately and unconditionally scrap its supposed annexations and call on all countries not to recognize them. The measure, spearheaded by the European Union, will also incite upon the immediate, complete, and unconditional withdrawal of Russian forces from all of Ukraine's internationally recognized territory. Russia's ambassador decried the debate as a one-sided exercise in pushing an anti-Russian narrative. Such cynicism, confrontation, and dangerous polarization as today we have never seen in the history of the UN, Benzia said. He reiterated his country's claim that the referendums were valid and that Moscow is endeavoring to protect people in the regions against what the Kremlin views as a hostile Ukrainian government. Dozens of nations from Latvia to Fiji argued for the resolution Monday, some speaking via regional organizations. The debate is set to continue Wednesday, and such Russian friends as Syria and North Korea are among lined up to speak. An Indian foreign minister fielding questions Monday in Australia declined to say what his country thought of the measure. A full 193-member assembly is expected to vote Wednesday or later. Russia wanted secret balloting, an unusual move that the assembly rejected 107 to 13 with 39 abstentions. Russian bids to consider the secret ballot idea were voted down. Russia recently vetoed a similar UN Security Council resolution that would have condemned the proposed organizations under its discretion. Made earlier this year, Security Council vetoes will now be explained in the General Assembly. The Assembly doesn't allow vetoes, but its resolutions aren't legally binding as Security Council ones are. During the war, the Assembly has voted to demand that Russia halt its attacks, to blame Moscow for the humanitarian crisis in Ukraine, and to suspend Russia from the UN Human Rights Council. Meanwhile, there has been a statement in the Security Council where Russia is among 5 countries with veto power. So this is that total article right there. And the word UN meets to discuss the Ukraine wars hours after a deadly Russia attack. This from yesterday. Apparently, more missile strikes like that. So obviously, there's something that needs to be done about that in regards. So that's all I have for the news today. And if you're on the YouTube side, again, please do subscribe, turn on bell notifications right here to blockchain, tech, and finance news. This is every day. Adjusted, finally found a good time bracket to get us going, get everything compiled so we're not late, we're not trying to scramble, and can move things along smoothly. In blockchain, tech, and finance news at 8 a.m. EDT every weekday and 12 p.m. EDT on Saturdays. So otherwise, we will see you back tomorrow, again, 8 a.m. EDT time. Didn't stream yesterday because it was a holiday, I was out away. But again, yeah, blockchain, tech, and finance news. Smash the subscribe button. Live weekdays, 8 a.m. EDT time, Saturday, 11:30. We start at 12 a.m. or 12 p.m. EDT time. You can search my KinsArt and OpenSea and Foundation for my NFT art. You can follow me on TikTok, KinToshi GG, Instagram, KinToshi GG, and follow me on Twitch, KinToshi GG, for extra social content and gaming live streams. All right, we'll see you all back tomorrow. Have a great and safe day wherever in the world you are. Stay well, stay safe.